Charles, how concerned are you about spoofing? And I don't just mean spoofing when it comes to, the caller ID says Amazon's calling and it's not, really Amazon. More so when it comes to the voice stuff. And, we had that robocall earlier this year during the New Hampshire primary that was not actually Joe Biden, but sounded like President Biden. And then you have all these, people who are saying, okay, I didn't know if my son was actually in jail, and I got this call that said he needed money and those sorts of things. That used to be emails that you could ignore, but now they're getting pretty sophisticated.
I think there's a learning curve on the part of the general population there in terms of, hey, these things can be faked. 10 years from now, I think we'll have a deep understanding collectively as a society that just because you hear or see something on video or audio doesn't mean that there's a high fidelity to it. It can be faked. And I think that until we get to that learning curve, there's certainly going to be abuse of the ability to use AI and other technologies to fake audio and video.
Hey, one last thing. Europe feeling the brunt of the cyber attacks, according to you guys, your report and your findings, making up 32% of global incidents. Why and how is the U.S. doing? We just have about a minute or so left here.
So the U.S. is right behind them. So don't breathe a sigh of relief just yet. This year, essentially, or in 2023, essentially, Asia-Pac and Europe switched places. Some of that can be geopolitical tension. Other can just be following the money trail and easy targets. At the end of the day, attackers are going to take the path of least resistance.
One last piece of advice for those of us who are worried about our identity being stolen. Just a quick piece of advice, 30 seconds. Is it just simple passwords? Be smart, folks.
Passwords is a great start. First of all, use unique passwords, complicated passwords, all of that. But most of the organizations you deal with will offer multi-factor authentication as an option, if not require it. Just because they don't require it doesn't mean you shouldn't be using it. Enable multi-factor authentication. It only works if you enable it.
Agreed. I kind of love it.
I do too. I do it for everything.
I'm like, okay.
Hey, we got it here on the Bloomberg terminal. Every time you log in, right? You type your password in,
tough.
and then you get your fingerprint.
It's really tough.
Or you can use the iPhone app.
No, it's good, and it's super, super secure. All right, Charles, thank you so much. Charles Henderson, Global Managing Partner, Head of X-Force over at IBM, joining us from Austin, Texas. Carol Master, along with Tim Stanovic, just got about 26 minutes left in today's trading session. We do have kind of a quiet trade in terms of the equity front, but we are down across the board just slightly on those major equity averages. This is Bloomberg Business Week.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. We've got stocks lower, Bitcoin on a tear. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks are quiet right now with the Dow currently down 36 points. S&Ps are down 14 and NASDAQ is little changed. The U.S. 10-year yield at 4.28%. Gold is down 3. Oil is climbing, but you mentioned Bitcoin. It's surging by 5.3%. to its highest level since December of 2021. Among the main 11 S&P sectors, leaders were energy and consumer discretionary, utilities and telecom were under pressure, and leaders to the upside in the Dow, Salesforce and Walmart, while Verizon and Amgen led to the downside. After earnings, Domino's Pizza rose as much as 9.8%, and in other news, Boeing's safety culture was found to be inadequate and confusing by the FAA. Wrapping things up, Workday and Zoom Video report after the bell. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney. And to hear live breaking news over your Bloomberg, type SQUA, S-Q-U-A, on your Bloomberg terminal. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close
That funky music will drive us till the dawn.
on Bloomberg Radio.
All right, everybody, just got about 18 minutes left in today's trading session. Carol Master along with Tim Stenovic. Charlie, of course, just breaking down the numbers. We were just talking with our Bill Maloney, and just who covers the markets, goes on the squawk and talks about interesting trends and stories. But
You know he squawks on the weekends?
he does.
If there's news?
He's kind of nonstop, but it's just, he said today, it was like he kind of was searching for things to talk about, although he did note Bitcoin topping 53,000, reaching the highest in more than 2 years.
Gives me something to think about.
Does it?
Yeah.
What?
I don't know. Maybe like a little comment about Bitcoin during the close today. Who knows? We'll see.
We both are like, we need this, we need this.
Dueling comments. Hey, I know somebody who has her eye on the markets all the time. That's Ann Milletti, head of active equity at Allspring Global Investment. She joins us from Wisconsin. And good to have you with us this afternoon. How are you?
Good. Thanks for having me back.
Okay, a quiet day, but that's okay because not every day can be like what we saw last week. You're arguing that the sign that we're seeing that breadth is expanding when it comes to the rally that we've seen so far this year bodes well for stocks moving forward this year.
I do think it does. Signs of breadth are generally positive. We saw a lot of concentration, as everyone knows. That was the theme of 23, the Magnificent Seven. What quietly started to happen in October of last year is a broadening out. And it's something that we talked about in our Outlook piece for 2024, that we really believe that that would be the trend for 2024, that especially in the small and mid cap space, that those areas of the market that had been ignored would start to outperform in 2024. And that's what we've started to see kind of quietly and name by name, which is another thing that I think is warranted. Fundamentals do matter, valuations do matter, and we're starting to see that. And so for the last, I think 11 of the last 13 weeks, we've seen the S&P mid-cap index outperform. We're kind of nearing where the high was in November of 2021. So not quite at that peak, but close to that peak. And the Russell 2000 even, continues to look attractive. People forgot that we've been in a bear market for the Russell 2000, one that lasted 23 months. And that's a long time. The average bear market for the Russell 2000 typically lasts 11 months, where the typical bull market for the Russell 2000 lasts 35 months. And so, the rally started in October. We're early into it. And so if fundamentals in the macro economy can stay strong, I think the quiet areas of the market are the places to be, and the places that have been ignored are still the places to be.
And so I just want to go, what's been the good of the market so far in terms of trends and maybe just I was going to say technicals, but we don't have to go there. But just in terms of fundamentals, what's been the bad of the market so far this year? Because if I look at the S&P 500, most of the major industry groups are higher by a lot so far this year. And then we've got like real estate, utilities at the bottom of the pack losing some ground. And that makes some sense in terms of the interest rate environment. But what is the good and bad of the market so far?
Yeah, Carol, it's a great question. And what I really like, as you point out, it's hard to see it when you look at the sector level, but the good and the bad really is happening kind of at the company level. And you're even hearing about it. You guys talk about it every afternoon when you talk about earnings, and you're seeing earnings react to what the company is delivering on. And so if the company is actually delivering and producing growth in earnings, then the company is getting rewarded. And that wasn't always the case in 2024. You know, for the small and mid-cap space, you were seeing multiple compression, even if the companies were performing, even if they were delivering earnings. Where in the Meg 7 stocks, yes, they were delivering earnings, but you were also seeing huge multiple expansion. And so fundamentals are really starting to matter, so is valuation. I would say there are still some areas of the market that look attractive to us. You can't ignore technology, so I'll just throw that out there. Our managers certainly are still interested in technology, but it's not necessarily just a few select names. They are looking down cap and looking at technology names, and it's because margins are really strong in those areas, in that area in particular, and we think sustainable. Healthcare, though, is kind of at the other end of the spectrum. It has been the area that's been the baby thrown out with the bathwater in some cases. Fundamentals weren't the greatest in 2023. They were hurt by a lot of factors, lower utilization, post-COVID, et cetera. But we're starting to see utilization pick up. I think also the fears of the GLP-1 drugs now is starting to get sorted out, like what might be reality and what might be just kind of like fear. And when you look at earnings growth projections for 2024, healthcare has one of the best expectations for earnings growth. And so that is an area that I would say, generally speaking, our managers are also very interested in.
Well, and it's actually the third best performing major industry group out of 11 in the S&P 500 as a whole, up about 7.7%. And it's interesting. I love that you went there because I feel like there's been so much news. There's been a fair amount of M&A activity like within the space. So you definitely see some things moving around. Where do you not want to be right now?
I think the areas of the market where you really just want to stay away from kind of factor into that low quality space. And I know that's kind of a generalization, so let me just define that a little bit. Certainly, I would be fearful, our managers are kind of shying away from companies that don't have great balance sheets, where free cash flow is kind of on the decline, where the competitive situation for companies doesn't look great. And so I know it's easy to kind of go to low quality when the market is rallying like this, because that's where you think you're going to get the biggest bang for your buck. But I don't think that's a good long-term strategy because the macro environment is still certain. So generally speaking, I would stay away from anything that appears to be low quality, and that's what our managers are doing. I do think the utility space has been a little bit more difficult, as you pointed out, because of rates. That, probably will stay that way for a good portion of the year, but, it does have a yield. And, at a certain point, that's going to be attractive too.
Hey, and just 30 seconds left, our team breaking the news that Charter Communications is said to weigh a takeover of Altice USA. You argue that M&A is going to start accelerating in the later half of the year. Where should we be looking for M&A?
I think, healthcare is definitely one of the places, technology as well. But I think we're going to see it across the board. Companies and CEOs, CFOs tend to get a little bit more optimistic once we see rates stabilize and once they think that the economy is pretty stable. And so I think the setup is pretty ripe right now for M&A.
Hey, 10 seconds. M&A activity that we are seeing, that's a good market sign. That's a positive, correct?
Yes, it is. It's
All
a
right.
great sign.
All right, good stuff. Thank you. Covered so much ground, as we always do with Ann Maletti. Ann, take care. Be well. Ann Maletti, Head of Active Equity over at Allspring Global Investments, joining us from Menominee Falls, Wisconsin. All right, folks, just about 10 minutes away. We've got the Dow down about 15 points, S&P down about 12, NASDAQ down about 4. Little change, but we have seen a higher rate environment today. We're getting to the close in just a moment.
Your company news headlines on Bloomberg Radio.
From Bloomberg World headquarters, I'm Charlie Pellet. Sources tell Bloomberg Charter Communications is exploring a takeover of smaller rival Altice USA. Those sources say Charter is working with financial advisors as it studies the merits of a potential deal for the broadband and video services provider. Charter shares, they're down now by 1.9%. Altice USA surging by 49%. Some of the other stories that we're following for you today: Intuitive machine shares are lower after the spacecraft company said its lander, which successfully touched down on the moon last week, likely landed on its side. The stock now down by about 33%, 33.8%. More on the story from Bloomberg's Kimberly Adams.
Charlie, there's been a lot of investor interest in this stock. Friday, it jumped 15.8% on word of the landing. Today's drop represents a pronounced reversal from the recent excitement over the Houston-based company's mission. As of its last close, the stock is up more than 350% off a January low. The landing was touted as a first by a private sector company to reach the moon intact, as well as the first U.S. spacecraft to reach the moon's surface since 1972. In a Friday press briefing, Intuitive Machines initially said the vehicle had landed upright, an incorrect belief it subsequently said was due to faulty data. Charlie?
And that's Kimberly Adams reporting right now. Shares of Intuitive Machines, they're lower by 33.8%. Freshpet shares are surging up 19.5% as the natural pet food maker forecasts better than expected net sales, and earnings per share also beat Wall Street estimates. Again, Freshpet up by 19%. Those are our top company stories at this hour, and this is Bloomberg.
This is Bloomberg Business Week with Carol Massar and Tim Stenivek on Bloomberg Radio.
It is Bloomberg Business Week on this Monday, February 26th. We are under 5 minutes from the market close. And Carol, you sent this story to me a little earlier in the day about, well, because why?
Well, first of all, if you work here at Bloomberg, you're here on Lexington, 58th.
Yeah.
You basically, you know, when summertime comes or we get near and you cross the street in front of the Sephora, there's usually a lineup for those who are looking to get on the Hampton Jitney. Basically, the buses, kind of luxurious buses.
I rode it
buses,
once.
Kind of is.
I rode it once like
kind-of-ish.
15 years ago.
All right, so once 15 years ago. But anyway, you see the lines of people getting on the bus throughout different times of the day to head out to Long Island.
Yeah, so they
all that good stuff.
They're private buses that, you know, look like the kind of buses that would be just normal buses.
Yeah. Yeah.
You go to the North Fork. It's pretty affordable, actually. The company's been around for 50 years. Well, now the operator of the Hampton Jitney is facing a price boost as New York City plans to start charging vehicles for driving into Manhattan's central business
Where's
district.
John Tucker when we need him?
I know, he's
our congestion
he's probably
reporter.
stuck in traffic right now because he's
Or picketing
because of the lack of
congestion
congestion pricing.
Exactly.
So under congestion pricing, buses would pay a $24 fee during peak periods, although they would receive a $6 tunnel credit during that time if entering or exiting the central business district through the Queens.
How many people are on the bus, though?
That's what I'm saying.
I mean, what is
Thank
it? So,
you for reading
so it's
my
an
mind.
extra quarter or a dime or a penny per person?
A $24 charge for a bus seems kind of low, given that
This is why you were like, do we really need to do this story?
Well, I just think like you wouldn't notice the price increase that they'd have to pass on to consumers if it's a bus full of people.
Hampton Jitney's president put out an email. We are asking for help from our ridership.
What kind of help do they need?
Could you give us like a couple pennies extra?
Like what
Just
is,
put it in there.
Or do they want the Hampton goers to go picket the city and say?
Are we missing something?
Well, I think we're missing the details about like what exactly the president wants to do, and that's because he did not respond to a phone message or email seeking further comment.
It's $40 for a one-way prepaid ticket from New York City to the Hamptons.
So what do you think it would go up to?
I don't
if they have to pay
know.
$24 in additional tolls?
Does this even say? I don't know.
Maybe $41, $42.
I think the people going out to the Hamptons would be okay.
You know what I bet?
I mean, they're all with their, coffees that are probably $10 a piece.
I bet fluctuations in fuel prices are a bigger concern for a company like this.
Sources say it's probably manageable.
Hey, you said it, Carol. But we're not running a business.
All right, where we are, though, is running over to our TV colleagues. That's because we're going to talk about the markets beyond the bell starts right now.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now we are 2 minutes away from the end of the trading day. Romaine Bostic alongside Alex Steele. We're counting you down to the closing bell. You here to help take us beyond the bell. It's a global simulcast with Scarlet Fu joining us in the TV studio, Carol Massar and Tim Stenivek on Bloomberg Radio. Welcome to all of our audiences across all of our platforms here at Bloomberg. As we count you down to the close, Carol Massar.
Yeah.
Not a whole lot of action here on the day, but that could change over the next couple of days.
Absolutely. It's jam-packed economic data, right? We're going to get the Fed's preferred inflation measure. That's a key one, but there's lots of them on consumer sentiment. Michael McKee was on with us earlier talking about the importance of durable goods and what we get there. So we're going to be going through all of that data. We have some Fed speakers as well. So there's a lot to get through, certainly over the next week or so.
We did find a little bit of action when it came to the price of Bitcoin today.
I knew you would go there.
Yeah, up 5% today. Best levels, since 2021, December of 2021.
Above 54,000.
Above 54,000.
And that's why those crypto-related companies are standouts in today's trade. MicroStrategy up at double digits.
Is this all
Coinbase
because of
up double digits.
MicroStrategy, though, Scarlett?
MicroStrategy is a reflection of Bitcoin.
Yeah, but I mean, Saylor came out and said he bought more. So is that why it's up? I don't know.
It's just this
Can we
vicious
ever say
cycle or
why?
virtuous cycle, however, depending on the price action.
Chicken or the egg? Chicken or the egg
I
at the
think
end of the day.
people were bored today, right? And I just feel like, okay, let's play around with Bitcoin.
Yeah, well, I mean, that is basically the only real action you're seeing in the market. But it gets to the broader question right now. I mean, well, at least according to Alex, that and, I don't know, her the pants that she buys from Paris. But we get to this idea.
Oh, wait. Pants in Paris?
I know.
Wait, we got to talk about that.
I mean, we spent like an hour on Bloomberg
We
TV
did.
talking about it.
You can go back and rewind.
I will go
Off air,
rewind.
too.
Yeah, Scarlett and I are all over this.
Scarlett, you're a part of this cabal too?
I'm bringing her on. I'm bringing her on to the
Willingly
Parisian
joining
games.
this.
Alex having a bad influence on the team here. We'll get back to Alex and her shopping habits in just a second. Let's walk you through the numbers. We get the closing bells here in New York. Most of the major indices going to finish the day in the red. The Dow Jones Industrial Average down 62 points, or about 0.2%. The S&P down 20 points, or about 0.4%, while the NASDAQ Composite is going to close lower by about 21 points, or 0.1%. One of the few bright spots out there, at least on the equity side, that's the Russell 2000, outperforming the broader market once again, and maybe that is what you want to see. Jay Woods was just talking about it, a broadening of this rally, a 0.6% gain on the Russell 2000.
All right, yeah, broadening out, right? It does feel like some of that going on, certainly in today's session. Scarlett, just a quick check on the S&P 500. You had most names to the downside, about 339, 162, though, gaining ground on this Monday.
All right, let's take a look at the sector performances. Go to the IMAP, which shows you where you have declines, and utilities, which is, of course, one of the smallest sectors in the S&P 500. The biggest loser is down more than 2%. Communications services, obviously a bigger sector, also down by more than 2%. Real estate investment trust losing more than 1%. On the upside, modest gains, really, in energy, consumer discretionary, and tech.
All right, let's get to some of the individual gainers. Go figure. The number 2 gainer in the S&P 500. Nothing high tech here, folks. Domino's Pizza. It was up almost 10% at its highs today, finishing the day, though, with a gain of about 5.8% here. Fourth quarter same-store sales in the U.S. Beating expectations, so bucking a trend that we've seen among some of the fast food chains. Stock hitting its highest in, I think, about 2 years, a little bit more than that, up the most since July. Share price, by the way, is in quite a run, up about 40% since the end of October. So some news on Domino's. And then we also had Micron Technology coming out among the top gainers in both the S&P and the NASDAQ 100 on higher volume, now making advanced memory semiconductors for NVIDIA. So this was certainly some eye-popping news. And then one more else I wanted to mention, number 1 gainer in the S&P 500 and a top gainer in the NASDAQ 100, Palo Alto Networks. Since that 38% drop on earnings last Wednesday, we are seeing investors continue to move into this name, and Palo Alto up about 7% in today's session.
Hey guys, quick thing here. We got Workday coming out with earnings. It looks pretty solid. Adjusted fourth quarter earnings coming in $1.57 a share. That's beat by about 10 cents. They also are looking at subscription revenue for the full year 2025, which would be this coming year, at the high end of $7.78 billion. They're also looking at a pretty solid inline margin for this year, about 24.5%. They're also looking to buy HiredScore, which just looks like a straight-up software company right here in New York.
Yeah, the stock is down.
HR stuff.
Is HR stuff? Okay.
The stock is down more than 2% right now in trading, but it's interesting that you bring up that M&A because there's so many of these enterprise software companies. You wonder at what point more consolidation will start to combine them. Every earnings season around this time, we talk through all these enterprise software companies. They're small and they're very niche-y.
Yeah, I can't remember the number, but I remember we were speaking with Anurag Rana, and he was giving us the actual total number of these companies that are out there, and it was an insane number. And he was basically
they're being started every day.
that it just has to come. It has to have that consolidation.
It's interesting you say that. We were just speaking with Ann Maletti over at Allspring Global Investments, and she said we see more M&A on the horizon, especially when it comes to tech companies. She says executives have to get more comfortable that rates are going to be stable and where they're going to be, but she expects M&A to pick up in the later part of the year. Hey, I do want to get to some decliners. Pretty easy to find some notable decliners today. I do want to start with big tech name. Shares of Alphabet falling more than 4.4% on the day today. This is amid concerns about how it's faring when it comes to generative AI. I don't know if you saw any examples of this over the last few days. People posted it on Twitter and on X and on Threads and wherever people are going these days about the differences in terms of like asking questions to Alphabet's platform, formerly known as Bard, Gemini, and they addressed some of that last week, but there are concerns, and there was a note from an analyst out today that said that this poses a risk to its search business, that it's not necessarily getting this right now, and we saw shares really respond as a result of that. Also want to take a look at shares of Charter Communications, because speaking of M&A, our own Bloomberg team wrote that Charter Communications is exploring a takeover of Altice USA, a smaller cable provider. That's according to people with with knowledge of the matter. CNBC did report that Altice has not been approached formally at this point. Charter working with financial advisors as it studies the merits of a potential deal for the U.S. broadband and video services provider. The people said asking not to be identified. Down 2.2%, Charter Communications, that is. The shares of Altice did shoot higher on the Bloomberg report. And then Intuitive Machines, ticker LUNR. We talked a lot about this one last week as a result of we can call this a successful moon landing, right?
I mean, I think so. I got poo-pooed on that earlier today, but I would think so.
I think so too. And you know what? Shareholders sending shares down 34%.
Did it land on its side?
It landed on its side, and that's why shares are lower today.
Okay, but the key word there is landed.
Exactly. Thank you, Romaine. Thank you. Shares still up 200% from a January low.
Did Carol nod her head in agreement?
Decline. Did you nod? No. I didn't see. You don't think it's successful?
I don't know.
She's a former gymnast. She's, she sticks the
landing.
landing. Okay.
Alex is a gymnast. You know that too, right?
Yeah, like 40 years ago.
All right, but you got to land.
But yes.
You got to land your mark.
But you have to stick your landing. If you land on your side, it doesn't count. But then again, they're not going for perfect tens. That's all I'm saying.
Hey, we're going to get back to Alex's and Carol's gymnastic past, but Zoom earnings are out. Zoom Video, of course, the meme stock darling that at one point was trading at almost $600 a share at the height of the pandemic, now trading at $65 a share, though it is moving higher here in after-hours trading. Earnings crossing the wire, a pretty big beat. Adjusted EPS, $1.42. Street on average was looking for $1.15. Revenue in the fourth quarter, $1.15 billion. The Street on average was looking for $1.13. Here's your forecast here. For the full fiscal year, the company sees adjusted EPS of $4.85 to $4.88 a share. The Street on average was looking for $4.72. The company says it sees full year revenue of $4.6 billion a share, pretty much in line with what the Street was looking for. Also authorizing a stock repurchase program of up to $1.5 billion.
Yeah, that's like the cherry on top of what looks to be a fairly decent outlook, especially when it comes to that revenue for the full year of 2025, $4.6 billion. Actually, that trails the average analyst estimate. I'm looking at the adjusted EPS. That is higher than expected. $4.85 to $4.88. Analysts were looking for $4.72 for full year EPS.
Yeah, the company's founder and CEO, Eric Yuan, saying in the press release, talking about free cash flow, right? Always crucial when you're looking at the balance sheet, saying it's up 24.1% year over year to the full fiscal year, about $1.471 billion or so, representing a free cash flow margin of about 32.5%. So generating some cash there.
He led the press release with the mentioning Zoom AI companion. I got to tell, I didn't know that there was a generative AI digital assistant for Zoom. Does it seem like everyone is coming out with a generative AI digital assistant?
You have to if you're in
100%.
tech.
I mean,
yes.
So that's aimed at boosting productivity, enhancing team effectiveness, and fostering skill development across the Zoom platform.
What does that even mean?
I don't know. I don't know if I need help Zooming. I don't know. I'm curious what that looks like.
Maybe they can be you and like you're not actually on Zoom and they can do your meetings for you, but that would be valuable. But I mean, I think that if you just look at the stock, isn't it just, hey, we're going to do a nice repurchase, therefore stock is up.
There we go. Yeah. Less so about the generative
They're going
AI,
to create
right?
people that are us that can do the Zoom. I kind of like that one. All right, guys.
That's when everyone says, back to the office, everyone, back in.
It's probably not good for Zoom.
We've got a problem. All right, guys, that's a wrap. Our Monday cross-platform, radio, TV, YouTube, Bloomberg Originals. We call it Beyond the Bell. We will see you again, same time, same place tomorrow.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
All right, well, across the nation's capital, federal regulators are in an all-out sprint racing to finalize the Biden administration's climate initiatives, touching everything from the cars that we all drive to the appliances that we use, Tim.
Yeah, the finish line is approaching fast. Anything that's not completed by late spring could be easier for Congress to repeal or for Republican foes to undo if President Joe Biden loses re-election in November. Carol, even federal funding earmarked for climate and clean energy programs under the Inflation Reduction Act could be clawed back by Congress or go unspent if the money isn't doled out this year.
Well, good to know. So more on what companies are up to and those that they are working, and what in particular the world's largest retailer are doing to create a more sustainable world. We welcome Fred Krupp. He's president of the Environmental Defense Fund, joining us now from New York City. Fred, so great to have you here with us. First up, before we get into some of the work that you guys have done with Walmart and what they're doing specifically, how is the world doing when it comes to protecting our environment? We're coming off the hottest year on record. Some say we're heading towards another one. That to me doesn't mean we are reversing or stopping our bad ways fast enough, or critics would say that we're not doing it fast enough. What do you say to that?
Well, I agree with them. We're not doing it fast enough. We've had, as you said, not only the worst, hottest year on record, but we're setting monthly temperature records every month for over 3 years now, compared to the same month in all of history. So the situation is urgent. The good news is that we are beginning to make faster progress than we have ever made before. It's still not fast enough.
Well, and one thing I wanted to ask you too is you guys work a lot with companies to encourage them to voluntarily reduce their emissions. Given how behind we are on cutting greenhouse gas pollution specifically, is this still, in your view, the most effective weapon?
No, it's only one of the weapons, only one of the things we need to do. The Environmental Defense Fund has, worked with the Environmental Protection Agency to put in place the strongest rules in the world on methane pollution. We've worked with EPA to put in place, they've now proposed, a rapid transition to electric cars and electric trucks within the next decade. So we need mandatory rules, not only in the United States, but all over the world. But I think what you need to understand is a lot of times the voluntary actions from car manufacturers, whether it's Tesla or GM or Ford, are what enable mandatory actions to get put in place. So these voluntary work goes hand in hand with regulatory work. They're not either or. We need both.
Hey, you mentioned the stars basically. How did an environmental nonprofit enter the space race here?
Yes, we expect within the next few weeks that Methane Sat will launch. And Methane Sat is an idea that came out of the fact that when we initially went to oil and gas companies and talked to them about methane pollution, they didn't think it was a big deal. They said they were putting very little into the sky. When we began to measure with handheld instruments, with planes, with helicopters, it turned out they were vastly underestimating the amount of pollution they were causing, and even reporting to EPA 60% less in the United States than was being emitted. Anyway, the idea of using a satellite came from the fact it would be a much more cost-effective. We'll be able now to look at every oil and gas facility planet-wide, covering 80% of all oil and gas production multiple times a week. Much more cost-effective than any other way.
Carol, we've done some reporting here at Bloomberg using those special cameras that can detect that, infrared cameras.
You're right.
So, yeah, really interesting
Whether
stuff.
it comes
Fred.
to leaks or something in terms of certainly the energy sector specifically. Well, having said that, Fred, I do wonder, you guys work with a lot of companies, and we want to get into Walmart and what they've been doing, but how... Help me here, especially when things are voluntarily, they've got to put out these plans and goals and so on and so forth. I mean, how do you, as someone who is very informed on this space and are working with companies, how much do you generally, kind of trust some of the data we get from the corporate sector on all of this? Because a satellite will help us really know what's going on, right?
Yeah, so in Abu Dhabi, companies voluntarily committed 40% of the global oil sales. Over 50 companies committed to reducing their methane emissions by 90%. We're not going to rely on their word for it. We're going to put in the satellite to make sure that they're living up to it. That the data we get from the satellite will be available to everyone listening. In fact, 2/3 of everyone who lives on our planet, everyone with access to the internet, will have access to the data and see which companies are doing a good job and which ones aren't for free. There'd be no charge.
Right. Well, it's
so
yeah, no, go ahead. No.
So we need to, in all of these cases, we always, you know, it's one step at a time, you know.
Well, I know, but I worry about, you know, as things get, how much time we have. Having said that, many companies tout their work, right, in cutting carbon, but they also push back on legislation or regulation that might be as effective or really effective, right? So, again, the net issue. I don't know. How do we do better on this? How do we put more pressure on companies to work with that and not kind of do something good in one hand and not in the other?
Pressure on them and also inspiring them. And as I tried to explain earlier, a lot of times when companies show what can be done voluntarily, that emboldens our legislatures to put rules in place and make sure it's a level playing field and that the laggards aren't getting a free pass. So these voluntary actions actually are quite important, not only for the results that they achieve, but also because they make it easier. In a lot of cases, they have made it easier to get legislation. Let's turn to Walmart if we can.
Yeah, I wanted to ask about Walmart because you guys have been working with them for almost 20 years at this point, since 2005. So talk a little bit about that.
So EDF worked with Walmart to set the first ever goal from a big retailer to get their supply chain to reduce its greenhouse gas emissions. So Walmart has done a lot of things with their own physical stores and their trucking fleet, but they recognize that 90% of the impact of the products that they sell was happening, greenhouse gases were being emitted in the supply chain when these products were being made. So working with them, we set this first ever goal to get carbon out of their supply chain. They met that goal, and then they decided they, were willing to do more. And then working with us and others, the World Wildlife Fund at the time, they agreed to set a goal of getting a gigaton of greenhouse gases out of their supply chain and their own operations by 2030. Now, what in heaven's name is a gigaton? It's about the same as what Japan puts into the atmosphere or Germany puts into the atmosphere in a year. Well, Walmart set that goal and they've met it. They just announced on an earning call a few days ago, they've met that goal not in 2030, but by the end of 2023. So, 6 years, 7 years early. So that's a big deal. And let's take the example of light bulbs. They started selling millions of LED light bulbs that would fit in the same, socket that any other light bulb fits in. And that was one of the reasons when these light bulbs came down, way down in price, that rules were put in place to eliminate sales of the energy wasting incandescent light bulb, which really is more like a furnace than a light bulb. Most of the energy that goes into the incandescent, is wasted producing heat.
Listen, and it's, because of their massive size, when they do something, it definitely starts to move the needle in a big way. Fred, thank you so much. Fred Krupp, president of the Environmental Defense Fund, joining us in New York City. You're listening and watching Bloomberg Business Week.
I'm from the UK and I'm the inventor of the gel razor. And today I'm looking for an angel investor to fund my project, the gel razor, whether that's a working concept and working prototype or manufacturing possibilities with investment or to get me a licensing deal secured. If you go in any supermarket today, you will see packets of razors sold separately with tins of mousse or gel. Hence I developed the all-in-one. The idea is you pressurize the handle, the gel flows through the reservoir up to the head of the razor, coating the blades, ready for shave. My target market is 18 plus, male or female, male blue version, female pink version. What I'm looking for in an investor is someone who's passionate, determined, shares my vision. That's an important step for me, and willing to succeed as I wanted to succeed myself. Patented in the UK in 2021 September. With copyright protection, I have a logo for the gel razor, which you will see on my LinkedIn profile. Currently working with a company in the US who have done me a lovely sell sheet. Big up to them guys. So if you're interested, contact me on LinkedIn profile, Paul J. Gwilt, GWILT, or email me at mufc219@gmail.com.
Okay, so how's this for a little career advice, Carol? Think of yourself as a growth stock, okay? It's like NVIDIA. That's a growth stock.
Mega
Fair
growth.
to say?
Yes.
Embrace steering through skids. So kind of embrace the moments where you feel like you're kind of getting off your path and steering out of control.
Right.
Beware of managers who keep you from growing. So if you're good at your job, your manager might keep you in that place, and then you're not going to grow and do other stuff, which I think is a really important trap to watch. How about not faking it until you make it?
This one I want to dig into. That one kind of blows my mind because we talk about the difference between men and women and faking it till you make it. Those are just some of the tips from the new book written by our next guest, which, by the way, know a thing or two about climbing the corporate ladder. Between them, they have got decades of experience in senior positions at United Airlines, Kraft Foods, Gillette, Motorola, McKinsey, and more.
Grace Puma is the former Chief Operations Officer at PepsiCo, and Christiana Smith-Shee is the former President of the Consumer Direct Division at Nike. The new book, it's called Career Forward, Strategies from Women Who've Made It. Grace joins us from Tampa, Florida, and we got Christina from Portland, Oregon. Good to have you both with us this afternoon. So Grace, I just want to start with you, and we're going to get to the book in just a second, but we got to talk about the consumer space because the two of you have just so much experience when it comes to working for companies that go directly to consumer, companies that have relationships with consumer, and we talk about the consumer all the time powering this economy. Grace, what out there is interesting to you about the consumer space or in the consumer space right now?
Well, I think the consumer is going through, some challenging times right now. For one thing, they're certainly dealing with this economic uncertainty. And so the shifts in what they're buying and how they're spending their money is certainly a factor. But you're also really seeing people start to get a little more nervous about their job security. And I think that factors as well into how consumers are thinking about their purchases.
Christiana, come on in on that as well, and your take on the consumer. You guys really do have an incredible vantage point in terms of what you've seen and how you think about the space and where it's going.
Well, obviously everyone's got their own opinions. I would say from what I see on a day-to-day basis, the consumer is still voting with their dollars for brands they love. So if there was ever a time to make sure that, from a brand point of view, you were connecting with your consumers and you were projecting the image that you wanted, that time is now.
Well, and I think about, when it comes to brands too, Grace, let me go back to you, if we may, in just the importance of women and thinking about women purchasing and their purchasing power or their purchasing power for their families. And I do wonder how you both, okay, so that's kind of just in terms of the brand approach, but how you guys have thought about your own specific experiences and whether or not there were commonalities that you found between each other in terms of what worked. So Grace, start there. As you guys were starting to put this book together, the commonalities you found, the differences you found in kind of your way forward.
Yeah, we, this book kind of got birthed out of the fact that we had met. We were both on a corporate board. And one day we went out after the meeting and really connected. And it connected around identifying that although we took very different paths to achieve what we achieved, some of the top levels in different corporations, we had some of the same learnings and some of the same truths. And then you add to that we both have, it's hard to call them millennial children, but children that are now in their 30s and having their own career paths. And we really wanted to transfer the knowledge and the learning that we felt really could be helpful as they set their own path.
I should note that you guys are still on some pretty interesting boards. Grace is on the board of Target, among others. Christiana on Columbia Sportswear, UPS, West Marine, to name a couple others. So, yeah, I mean, definitely still in the consumer space right now, no question.
Yeah, exactly. Christiana, so come on in too. Like, as you guys were putting together the book, what did you want to make sure was like kind of in the messaging here from your own experience?
Yeah, I think we had a really strong goal to address this moment in time, as well as just share, decades of career experience learning that Grace and I had. And as Grace said, even though her path was very much through some of the top corporate brands and companies. Mine was consulting for over 20 years and then a C-suite job at Nike. We had similar takeaways about how to build a career that you love and how to make it worth it. And when we first started writing the book, we were still in the pandemic. And there was, of course, all this talk about women falling out of the workforce because they couldn't, make the childcare life, work balance work. And then there was quiet quitting, and there was just act your wage. There's so many things right now that show in this moment a need to talk about how you can still invest in yourself and still have a great career while meeting this moment and balancing all the other forces that are at work in your life.
Well, we want to get into some of the specifics, but I wonder, Grace, if I said luck, skill, timing, what was the most important thing in your career path?
That's a great question. I would probably say
can be all of it
skill.
too. Skill.
Well, no, I think it's skill, and I think it's about not just you're not born with the skill. Okay, it's cultivating skill, reevaluating what the next skill or capability is needed or will be needed. So it's an ongoing commitment to learning, and we talk a lot about that in our book, and to read the tea leaves on what is necessary and valuable in those skill sets.
Same thing to you, Christiana.
Well, and if I could,
yeah, please.
Would you mind if? Yeah, I was going to say, do you mind if I jump in on that?
No.
Going even a step further, what Grace and I believe is you can do a lot more than you think to create your own luck.
What do you mean?
And when we talk about people we see at work, and we say, she's so lucky she got that project. He's so lucky that story hit right at the right time, whatever it is. But you roll the tape back, you realize they invested in building their network inside and outside the company. They invested in knowing things that are important at that moment in time. They demonstrated performance. That's when opportunities tend to come to you. And then we say the key is, do you hear the knock on the door when opportunity is knocking, and do you answer it, right? That's timing. So there's clearly serendipity in your career. There's no question. But you can do an awful lot to be in the right place at the right time through the steps that you take to invest in yourself.
Well, and some would say, I'm trying to think whether I want to think our leader or book or other books that about this whole idea of being the first one at the office, being the last one to leave. And sometimes you can't do that, but certainly early on in your career, people will move around and be like, who's here? Who can do this? You're here because you're here early and you're here late. And
okay, but
it's as simple sometimes as something like that.
It is, but I'm wondering, and I want to go to you, Grace, first on this one. If in an era of hybrid and remote work, that is more of an issue because you're not going to run into the boss on the Zoom. You're only going to run into the boss, at the water cooler if you're physically around the boss. And there's an entire generation really who graduated in the last 4 years that don't have the same idea of going to the office that I think a lot of us grew up with.
Yeah, I mean, no doubt. And certainly, during the time that we had been in a lot of our career, it was an opportunity, you're first in, first out. But today is very different. And, I definitely think, addressing the virtual world, there is still a need to ensure connection. And connection through work is really the best connection. But making sure that you're where you need to be and that you're contributing in those moments and that you're establishing relationships. You hear a lot of people in the hybrid work right now going out and even meeting with colleagues outside of work just to make sure they have a connection. But I think what you said earlier, we talk about this concept of growth stock. That's more important, I think, than the FaceTime. And
Really?
we talk about it. Yeah, I do. Because we talk about it in the book about, and let me just take a minute on it. If you think about a growth stock, you can think of any company that comes to mind. Let's take Apple, for example. They tend to grow at a much faster pace than their competitors. And they do that by reinventing themselves, by looking around the corner, by investing in the right things. So when you apply that to yourself, whether you're working virtually or in the office, you're going to adopt a mentality that says, I want to, no matter where I am, no matter how well I'm doing in my current job, I'm going to be thinking future forward, and I'm going to be cultivating and growing and investing in the type of things that I need to be able to learn and contribute at a higher rate. And those often lead to opportunities and career progression along your journey.
So, Christiana, it's kind of like, don't wait for someone to tell you what you need to do. Look around you and figure out what you need to do to either get to the next level or the next position or the next opportunity.
Yeah, we would definitely agree with that notion of staying curious, of thinking ahead, of planning a bit in terms of saying, hey, this year, what are my goals in terms of skills I'm going to need to build? What are my goals in terms of people I want to get to know? And in the spirit of meet the moment, we would also say make the most of the opportunities that you do have. So specifically in this hybrid and remote work environment, you may not, as Grace noted, have as many chances to just hang around the water cooler, but you're on Zoom all the time. There's one way you can approach those meetings like, oh, I got another Zoom. I'm going to turn off my camera. I'm going to be doing my email while the meeting's going until I hear them call my name, all that kind of thing. We've all been there. Those are really important opportunities. There are other people on that call, and there are other chances that you've got to show up. So we would just also say, make the most of the chances that you get. If you're in the room, you're there for a reason. Speak up, participate. That room nowadays may be virtual, but it's really important that if you're there, you're noted.
That's a really good point. What
I do. I just think, talking to colleagues at other companies, people who work in other industries, there's definitely a culture at some places where the camera's on or the camera's off.
That's really
in
interesting.
Meetings. It's really interesting.
I've always kind of had it on, and
this is a camera on culture.
Yeah, this is a camera on culture. Hey, folks, sit tight. We're going to come back. Grace and Christiana. Grace Puma, former Chief Operations Officer over at PepsiCo. Christiana Smith-Shee, she's the former president of the Consumer Direct Division over at Nike. Their new book, Career Forward, Strategies from Women Who've Made It. We've got lots more questions, including that fake it till you make it. Don't do it. We want to find out.
Another thing that startups need to look for is a market that is either started to undergo or is soon going to undergo exponential growth. I think this is actually related to one of the biggest mistakes investors make when evaluating startups. Investors always say, well, what's your growth rate? We care about the growth rate. Investors will forgive smallish revenue today if it's growing quickly. For some reason, people don't think about markets this way. But if you think about the most important startups, they are the ones that I start in small markets that are growing very, very quickly. 11 years ago, the market for iPhone apps was $0. It's now huge. And I think if you only think about the TAM today, you'll make a big mistake. What you really want to do is identify a market that's going to grow every year and be able to ride that up elevator.
All moving in the red. S&P 500 index down 19 points today, a decline there of just about 0.4%. Dow Industrials down 63, drop there of 0.2%. The Nasdaq Composite Index down 20, a drop there of 0.1%. Interestingly, though, the Russell 2000 Index of small cap shares had an up day. That was a gain of 0.6%. 10-year 4.27%. The 2-year 4.72%. Spot gold down $4 the ounce to $2,031, drop there of 0.2%. And West Texas Intermediate crude oil up 1.4%, $77.59 for a barrel of West Texas Intermediate crude. Now, what about the overall backdrop for mergers and acquisitions given the interest rate environment? That question today for Ann Maletti, head of active equity at Allspring Global Investments, who was a guest right here on Bloomberg Business Week.
Companies and CEOs, CFOs tend to get a little bit more optimistic once we see rates stabilize and once they think that the economy is pretty stable. And so I think the setup is pretty ripe right now for M&A.
And you can hear more of that conversation on the Bloomberg Business Week podcast. Yes, you can download it wherever you get your podcasts. An activist investor says the Walt Disney Company should appoint a corporate chief technology officer and focus on technology transformation. That's according to Blackwell's Capital, which contends the entertainment and media giant should have an overarching CTO who oversees innovation. Disney today down less than 0.1%. On to world and national news, some of the stories that we're following for you. Sweden has cleared the final obstacle to gaining NATO membership in a move that will solidify the alliance's grip over Northern Europe and the Baltic region. The approval by Hungary's parliament today came 21 months after the Nordic country submitted its membership bid jointly with Finland in response to Russia's invasion of Ukraine. Again, recapping stocks lower, S&P 500 index today down 19 points. That was a drop of 0.4%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. We want to get back to the authors of a new book. It's called Career Forward, Strategies from Women Who Have Made It. The authors are Grace Puma, former Chief Operations Officer at PepsiCo, and Christiana Smith-Shee, former president of the Consumer Direct Division at Nike. One thing we wanted to get into is this idea of don't fake it till you make it. And the reason we bring it up, we had a conversation with the head of one of the divisions at one of the major cruise companies just on Friday. And this idea of when she got a big promotion that people were like, yeah, but you didn't have all the necessary experience. And she was like, yeah, you were kind of right. You know, but I think about the difference, and forgive me, I don't like to make generalizations, but there has been a lot written about where men will be like, I got it, I'll figure it out. Women are like, oh my God, I don't have all the qualifications. Again, generalizations, but people have written about a lot of this. Grace, let me go to you first. Why do you guys say don't fake it till you make it? And what exactly do you mean? Because sometimes you don't have all the qualifications, but you can figure it out.
Yeah, there's when we think about, fake it till you make it, we don't think that's a bad thing. We think it's a good thing. The reason is because you do whatever you need to do to gain the confidence as you go into a new business or a new environment or a new position. No one goes into a position when they know everything, okay, especially if you progress your career. So we think it's okay to stand up, whether you have to talk to yourself in the mirror or pump yourself up, but you're there for a reason. Believe you're there for a reason and have the confidence to know you're going to figure it out. You're going to learn things and you're going to be able to apply the talents you do have to be successful. That's very different than what you hear about imposter syndrome, where people say, hey, they got the job and they're not qualified. We think that's unhealthy. But fake it till you make it means, have the confidence that you're in that position or you've been given that opportunity for a reason, and have the faith that your past history will tell you that you'll learn and you'll achieve.
Yeah, Christiana, jump on in here and sort of share your experience with this and the way that you thought about it when you were writing about this in the book.
Yeah, the reason you might think we're saying don't fake it till you make it is because what we're saying is get past that thinking, right? You were put there for a reason. Your bosses aren't crazy. The people who hired you knew what they were doing, right? Learning what you need to learn to fill in your gaps in a new role is not faking it, right? That's being programmatic. That's being strategic. That's leaning into it. That's being forward thinking. So all we would say is don't fake it till you make it. Put a plan together to get the rest of what you need in terms of the experience, the skills, the confidence to do the new role that you were put in. But recognize that you are there for a reason in the meantime. And saying that I've got to learn and get down this learning curve in this new role is not the same as saying I'm an imposter and I don't belong here. We really, really dislike the phrase imposter syndrome because that leaves you no place to go. That doesn't give you a path forward, and that's not a very confidence-building mindset.
You explore this idea in the book about making sure you're growing within a role. And you argue that you don't want to be too comfortable in a job. And I think for a lot of people, that can be kind of tough because, okay, well, they've worked so hard to get to a certain place, and they're finally in that place. Why do they want to be necessarily longing for something more, Grace?
Yeah, so, it starts with what we're trying to encourage people to do is to have and set a strategic path for your career and a cardinal direction. And a cardinal direction gets determined on what are your aspirations, and they can evolve over time. So to your point, we think it's important that if you're in a job and you feel like, I'm doing great, I might be getting great performance reviews, but you're no longer learning, then you have the obligation for yourself to meet your aspirations by continuing to look for opportunities to expand your capabilities and expand your contributions. And that can show up in a number of different ways. It might be raising your hand and saying, hey, I'd like to get involved in this particular project or this particular initiative that's outside my area, because you're going to know that you're going to grow through that experience. So that's kind of the basis of it. And it also is important, if you set a cardinal direction of what you want to aspire, that you're checking in with yourself and saying, am I on track? And does the job that I'm doing today continue to grow me and progress me on that journey?
Is it safe to say that, Christiana, there is a point that you get to that you might be like, I've outgrown either this company or this career trajectory. I've hit the top and it's just time to move on. And you just have to face that. Even as much as you might like the company, the people you work with, if you really want to advance, sometimes you've just got to leave. It's not just about making more money, but advancing.
Yes, we agree with the notion that if you want to keep growing, sometimes you have to go. And we call that a fork in the road. And sometimes those forks in your career path are forced on you by a company change of ownership or a leadership change in your management team, whatever. But sometimes it's because you're proactively realizing, like you said, that you have grown to a point where you need to do something different. And what we want to encourage you to do is be self-aware enough to actually recognize those moments when they come versus get surprised by them. And the way you can get surprised by them is if you don't go when you've kind of outgrown your current role. If you don't actually push yourself to get to something next or new, you could end up in what we call benevolent stagnation. And benevolent stagnation is, I'm still in the same job, I'm still performing, everybody's kind of taking me for granted. I've noticed I'm not seeing the same increases in my comp. I've noticed I'm not getting invited to some meetings. I've noticed I'm not being pulled into the cool projects. And we use the metaphor of a rocket in orbit, right? If you're in orbit around a planet, you still got to turn the gas on periodically or gravity is going to pull you down.
Love
and
that.
It is the same thing at a job. You got to grow or you got to go.
All right, Grace, Christiana, we only have about a minute left here. So just quickly, Grace, let me start with you. 30 seconds, some final thoughts here.
I think I would just encourage you to really embrace ambition and realize that ambition is a really good thing. It means you're going to create a path for yourself to achieve the best you can achieve. And it might be different for every person, but we would encourage people to do it because it's worth it, having a career.
Women especially, it's okay to be ambitious. I'm just going to put it out there. Christiana, 30 seconds here, your final thoughts.
Love owning the A word, as Grace said. The other thing we like to say to women in particular, but again, applies to everybody, is if you're not in the driver's seat of your career, somebody else is. And you can't get to a place you want to go to unless you're the one at the wheel. So we try to give you tools and ideas for how you could stay in the driver's seat of your career path.
Well, and that plays into also a chapter you guys have, Steer into the Skid, which I really love. I had to steer into a skid, and it was such a great opportunity that I ended up creating, but it didn't feel like it as I was going through it. So some great advice. Grace Puma, former Chief Operations Officer at PepsiCo. Christiana Smith-Shee, former President of the Consumer Direct Division at Nike. Their new book, Career Forward, Strategies from Women Who Have Made It. Thanks to you both. This is Bloomberg.
Your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. Sources tell Bloomberg that Broadcom has put on hold a sales process for security software business Carbon Black, which could have been valued at about $1 billion, including debt. Those sources say indications of interest fell short of Broadcom's expectations. After hours, we got Broadcom down now by just about 0.2%. Freshpet shares surged today as the natural pet food maker forecasts better than expected net sales, and earnings per share beat Wall Street estimates. Today, Freshpet up by 19.7%. Today was the first day that Amazon made it into the Dow Jones Industrial Average. The e-commerce pioneer replaced drugstore operator Walgreens Boots Alliance. Amazon shares declined today by 0.1%. We had shares of Walgreens Boots Alliance Reliance, which left the Dow lower today by 3.4%. Apple has been exploring the idea of developing new wearable devices, including a fitness ring, smart glasses, and even AirPods with cameras to broaden one of its most important business areas. Today, Apple was down 0.75%. Sources tell Bloomberg Charter Communications is exploring a takeover of smaller rival Altice USA. Those sources say Charter is working with financial advisors as it studies the merits of a potential deal for the American broadband and video services provider. Today, we had Charter Communication shares lower by 2.3%. Shares of Altice USA, though, surged today by 36%. And those are some of our top company stories at this hour. I'm Charlie Pellet, and this is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenovec on Bloomberg Radio.
All right, everybody. Tim and I getting ready to wrap up the Monday edition of Bloomberg Business Week here in our Interactive Brokers studio. Am I going to have to turn this car around?
You know what they say?
Am I going to? Come on, kids.
You know what they say?
You should see these two.
It's Tuesday somewhere.
I'm going to have to separate the two of you. It's Tuesday in it.
The two of us, that's
almost, right? No, it is
me
Asia.
and Doug Krisner.
Talking muni bonds. You missed it.
Were you really? Are you lying to me,
Absolutely.
Krisner? Yeah.
What's up, Doug?
It was a weird kind of day. I feel like we're marking time for the week.
The market is kind of a little anxious about this PCE data that we're getting on Thursday. I think that there has been so much debate going on right now. If you look at the way in which the bond market is behaving, when will the Fed move to cut interest rates? Will we even get a rate cut this year?
Did you ever have your parents say, "We're going to do it when we do it"? Like, it's kind of one of those things. Like, you know what I mean? The Fed's going to do when they're going to do it. They're going to watch the data points.
But then you have to kind of consider what the market has been discounting based on the tea leaves and what the market has been reading here. And a lot of that has been repriced. Some of the data has been hot. The new home sales data today was stronger than forecast. That may have been one of the reasons that yields
some support.
bumped up a little bit.
What's interesting is we see yields moving higher, but still equity markets kind of powering higher too. Today, notwithstanding.
Hey, we've had some big moves in the equity market.
That's what I mean.
Yeah.
But we've also had some big moves when it comes to, the rate market too.
That's true. And I'm thinking that where that AI trade has played out, the NVIDIA rally of last week, I mean, there's going to be a little consolidation in that story.
Did you watch 60 Minutes over the weekend?
I didn't. I was here last night.
It's a really good piece. I'm trying to get everybody to watch it.
I couldn't watch it. I was glad to be on the air, but
there's this funny little thing called the DVR.
A what?
Or you could even go online.
DVR? What are you kidding me?
You could even go online and
you can stream it, Doug.
Yeah, you could
Carol,
stream
you
it.
Can stream it.
I have an app, like a CBS app.
If you, our record player broke this weekend.
Well, but that's okay. That's kind of
that's high fidelity. That's a whole other thing.
It really did.
All right.
Okay,
like
go.
Okay, get us back on track.
It was a 2-segment piece, and it was with the U.S. ambassador to China, Nicholas Burns, but just about the importance of the relationship between U.S. and China, a complicated one, but kind of how they really still need us. And also I felt like rather negative. I was kind of surprised in the tone of kind of some of the stuff that's going on in China and making it difficult to do business there. And yet, there's a lot of Starbucks, there's Apple, there's a lot of companies they actually haven't pulled out.
That's a good thing that you mentioned that, because the CEO of the Chamber of Commerce is going to be leading a delegation to China this week. And I think a part of the delegation will include a former U.S. trade rep. And not only are they going to be meeting with the leaders of American firms in China, but they're going to be meeting with Chinese officials as well. One of the things that's apparent right now, I mean, that there is so much aversion on the part of foreign investors to go into the Chinese market right now. And, whether it's on the equity side, on the debt side, there's so much uncertainty. But foreign direct investment is way down. Now, is that going to be important for the economy going forward? I don't know.
I think also
the Party Congress that's going to be very important in next week or the week after. So that's going to be very important to see if we get any meaningful change in policy. Go ahead.
Doug, does any meaningful change in policy happen if we have the incumbent win in November versus Trump coming back?
Boy, that's a tough question.
Because
You know, because if you look at what the Biden administration has done, they haven't been as extreme as what Trump has said in terms of new tariffs, which essentially would be a tax on U.S. consumers and U.S. businesses demanding goods out of China. But the Biden administration really hasn't removed, you know, any of the tariffs put in place during the Trump administration, and now we've got the export controls